Balance sheet is one of the main financial statements, and it refers exactly to this idea of balance, a balance between two elements, assets and liabilities. The assets are composed of properties, a house, land, money, everything that is owned by the entity, and the rights, invoices, bills, that other people have to pay for this specific entity. Liabilities, composed of obligation that this entity have to pay, accounts payable, debt, and net worth, the ownership equity. The balance sheet is just that, the balance between the assets and liabilities plus net worth, or capital. They must be always the same. As already said, assets are the economic resource. Cash, investments, real estate, and others. Everything that has a financial value that can be evaluated. To be considered an asset, the item should be a property or a right, a resource controlled by the entity, be measurable in monetary terms, and generate benefits for the entity. Liability is an obligation of an entity arising from past events, like any type of borrowing that must be payable. Net worth, or owner's equity, is the money invested in the entity by the owner or partners. The accounting equation relates assets, liabilities, and owner's equity, or net worth, depending on the type of entity.